You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 24th day of February, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. The first one, that's our live training room. It's 2 hours, but it is private. It's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in a bit, he will walk you through step by step how to take the trial. We'll get your indicators up and running today, and your trial will officially begin tomorrow. Now, this broadcast, the afternoon broadcast, unlike the morning broadcast, this one's open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're just busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You already got the YouTube part memorized, so really all you need to remember is the CFRN. And not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way to see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But if you want to see how we've evolved, that's your go-to place, youtube.com/CFRN. This is our daily schedule each and every afternoon. So we're going to get right into our daily devotional. And this is the last day on this topic, how to overcome negative thoughts. This is day 3 of 3. Today's scripture is Isaiah 26, verses 1 through 6. And I'm going to share it from the Message translation. At that time, this song will be sung in the country of Judah. We have a strong city, salvation city, built and fortified with salvation. Throw wide the gates, so good and true people can enter. People with their minds set on you, you keep completely whole, steady on their feet, because they keep at it and don't quit. Depend on God and keep at it, because in the Lord God you have a sure thing. Those who lived high and mighty, he knocked off their high horse. He used the city built on the hill as fill for the marshes. All the exploited and outcast peoples build their lives on the reclaimed land. Again, that was Isaiah 26, verses 1 through 6. So, on the last day of this topic, we're going to talk about the key to overcoming negative thoughts. The key to overcoming negative thoughts isn't positive self-talk. Being a good person, doing enough good deeds, trivializing our mistakes, or finding a good self-help book. The key to overcoming negative thoughts is remembering God's unstoppable and unending love for us. Worries, insecurities, and shame might still show up in our minds, but they lose their power in comparison to God's affirmation of our identity as His beloved children. Of course, it's not always easy to let God's truth transform our attitudes. It takes time for our identity in Christ to drive out nagging negative thought patterns. But prayer and positive people can help us take daily steps towards a healthy mindset. That's why it's wise to ask for help. Don't fight alone. Negative thoughts thrive in the dark. So let's stop hiding. It might feel awkward or scary to show vulnerability, but it's better to bring your negative thoughts into the light. Don't struggle alone. Find someone you can trust, that you can talk to about your negative feelings. To start, you might consider filling out an online prayer request if your church offers such a thing. But don't stop there. Find a mentor, pastor, or Christian counselor who can help you process your negative thoughts. And remember, choose vulnerability. Let's pray. Heavenly Father, thank you for being our everlasting refuge and our source of perfect peace. We trust in you, the rock eternal, knowing that you establish and protect those who rely on you. Help us to walk in humility and faith, standing firm in your truth. May our hearts remain steadfast in you, and may we always give you glory. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Monday. Yep, Monday again. Hope you had a great weekend. Let me give you the numbers from around the world. We shall start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 153 points. The NASDAQ is down 75. S&P 500 is up 4. And the Russell 2000, our man in the street, is down 5. Pretty quiet, pretty thin. In the commodity basket, crude oil up 31 cents, trading 70, 71 last. Gold up $4.30, trading 29.57.50 last. Silver down 43 cents, trading 32.58 last. That's a drop of almost 1.5%, or almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 98 points. Shanghai dropped 6. The Hang Seng fell 136. And in the European markets at the close, FTSE was unchanged on the session. In other words, it was down less than 1 point. The DAX gained 133 points. The CAC fell 63. So they gave us a mixed day in Asia. It was a mixed day for the UK. And so far, it is a mixed Radio Monday here in the US of A. We got 2 of the major indices in the green, not by a lot, the Dow and the S&P. And we've got 2 of the major indices in the red, the NASDAQ and the Russell. And again, not by a lot. For those who trade futures, we like to see all 4 of the major indices the same color. Doesn't matter if they're all 4 red or all 4 green, because with futures, you can trade in either direction. You can be long, short, long again, all in the same hour if that's what the chart in front of you tells you to do. But it's on those days when you have all 4 of the major indices the same color, that's when you tend to get better follow through on your trades. So, while that's what we like, we got to deal with the hand we're dealt. We got to play the hand we're dealt. And at the moment, it is again a mixed Radio Monday. So, on the news, Pope Francis remains in critical condition today after receiving heavy oxygen flows and a blood transfusion over the weekend to stem a respiratory crisis, according to Vatican officials. As of this writing, Francis was said to be alert and communicating, but showing signs of early kidney failure, which doctors described at this point as under control. Lord, we pray for the Pope. Touch him by the power of the Holy Spirit. Heal him. And Lord, we ask that he not be in pain or distress, but your peace that surpasses all understanding would surround him at this time. If and when Pope Francis resigns, or passes away. The Vatican will commence a conclave of cardinals. That's the second highest position in the Catholic Church, to elect his successor. And again, I talked to you, I think, about this last week. There's a smokestack. Everybody's out in St. Peter's Square. And when black smoke comes out, I think that means they haven't arrived at a vote. And when white smoke comes out, that means there is a new pope elected. I might have that backwards. I wasn't raised Catholic, so those of you out there who were, I'm sure you know. I have watched the process several times on TV, but it's been a few years ago. In Germany's pair of conservative Christian parties won control of parliament yesterday, receiving 28% of the vote and ousting Olaf Scholz and his center-left Social Democrats after 3 years in power. That sounds kind of familiar. The party's leader, Friedrich Merz, will become chancellor and look to build a coalition government over the next few weeks. The contest garnered the highest voter turnout since unification in 1990 at 83.5%. The election also saw Nationalist Party, Alternative for Germany, double its vote from 2021, earning the second highest number at 20% to the Social Democrats' 16%. The rise of the AfD complicates Merz's coalition building plans, as his and other mainstream parties have refused to align with the Eurosceptic immigration strict group. Analysts expect Merz to attempt an alliance with Scholz's party and the fourth place Greens. Yeah, they got a Green Party too, at 12%. Scholz called for early elections after his coalition collapsed in November amid disagreement over how to boost the country's economy, which is the European Union's largest. It's kind of messy. Well, it was bound to happen. Because, of course, as you know, Elon will not allow your children to get polio vaccines anymore, or measles vaccines. That's said in jest. Hopefully you're laughing, because he's repeatedly said, or not Elon, but Robert Kennedy. He said, it amazes me how many times he said in public forums during interviews, I'm not taking away anybody's vaccines. But here we go. Measles. So it's like one side will beat something to death even when they're confronted with the truth that shines a light on what they just said as not being true. Anyway, a measles outbreak in the South Plains region of northwest Texas has infected at least 90 people since late January, with 77 cases in teenagers or children and 16 cases leading to hospitalizations. Across the state border, nearby Lea County, New Mexico, reported 10 cases. The viral airborne disease is highly contagious, causing rashes, fever, and respiratory issues. Children under 5 and immunocompromised people are at higher risk. Prior to a 1963 vaccine, nearly every American teenager contracted measles by age 15, killing around 500 people each year. The disease was declared eliminated, meaning no continuous endemic transition in the U.S. in the year 2000. Officials have not determined the origin of the current outbreak. Of the 90 cases reported in Texas, 5 had been vaccinated against the disease, while the rest were either unvaccinated or had unknown status. Something you might want to take a deep dive into. I'm sure it didn't come from the wet market in Wuhan. But all right, let's look at the market. Maybe that won't be so crazy, or maybe it will. Apple announced today that it will spend and invest more than $500 billion in the U.S. over the next 4 years, including plans to build a new manufacturing factory, double its advanced manufacturing fund, and hire 20,000 people. Apple CEO Tim Cook said in a statement, "We are bullish on the future of American innovation, and we're proud to build on our long-standing U.S. investments with this $500 billion commitment to our country's future." From doubling our advanced manufacturing fund to building advanced technology in Texas, we're thrilled to expand our support for American manufacturing, and we'll keep working with people and companies across the country to help write an extraordinary new chapter in the history of American innovation. And on that statement, Apple is up almost 1%, or $2.44 per share. Apple's announcement comes just days after President Trump said Cook promised him hundreds of millions of dollars in U.S. investment and that the tech giant's manufacturing would shift from Mexico to the U.S. Trump said Friday they don't want to be in the tariffs. And Tim has responded. Microsoft has canceled some leases for U.S. data center capacity, according to TD Cowen, raising broader concerns over whether it's securing more AI computing capacity than it needs in the long term. OpenAI's biggest backer has voided leases in the U.S. totaling a couple of hundred megawatts of capacity, the equivalent of roughly 2 data centers, canceling agreements with at least a couple of private operators, the U.S. brokerage wrote Friday, citing canceled checks or inquiries with supply chain providers. TD Cowen said its checks also suggest Microsoft has pulled back on converting so-called statements of qualifications, agreements that usually lead to formal leases. Exactly why Microsoft may be pulling some of these leases is, at the time, unclear. Starbucks announced it will eliminate some corporate jobs as the CEO, Brian Niccol, focuses on the company's turnaround plan. In a letter obtained by Yahoo Finance sent to employees on Monday, Niccol shared that the company plans to eliminate 1,100 support roles and several hundred additional open and unfilled positions globally. The memo said employees will be notified by Tuesday, February 25th. He added, "Our intent is to operate more efficiently, increase accountability, reduce complexity, and drive better integration, all with the goal of being more focused and able to drive greater impact on our priorities." And on that news, Starbucks is up 1.5%, or $1.71 a share. You know, Starbucks used to have a policy that allowed the unhoused to use their bathroom without having to purchase anything. You know, most fast food chains, restaurants, and other types of stores. Some stores provide, like Walmart, they let you use the bathroom. They don't police it too heavily, I don't think. You can't go in there and set up camp. I mean, they have somebody that patrols the area, but anyway, Starbucks, long known for their largesse, they took that back a while ago. We talked about it. From Bloomberg, Supply Lines is a daily newsletter that tracks global trade. It says the Trump administration took aim at China with a series of moves involving investment, trade, and other issues that raises the risk ties may soon worsen between the U.S. and its top economic rival. In recent days, President Trump has rolled out a memorandum telling a key government committee to curb Chinese spending on tech, energy, and other strategic American sectors. The administration also called on Mexican officials to place their own levies on Chinese imports, a move that comes after some firms from the Asian nation shifted production to the U.S. neighbor to avoid duties. The U.S. also proposed fees on the use of commercial ships made in China to counter the nation's dominance in the production of the vessels. Chinese shipping stocks fell today while the benchmark CSI 300 index slipped 0.2%. The yuan traded onshore rose 0.1%. The 7.2480 versus the dollar as of 4:21 p.m. in Shanghai. Taken together, the steps amount to the most sweeping, forceful actions targeting Beijing in Trump's second term and could complicate a deal to reduce China's trade surplus with the U.S. that the president has indicated he wants to forge. JP Morgan said today it was setting aside another $50 billion for its direct lending push as the Wall Street giant looks to expand its foothold in the rapidly growing private credit market. Traditional lenders such as JP Morgan, Citigroup, and Wells Fargo are rushing to grab a bigger slice of the booming market that has been dominated by private capital providers. The asset class is expected to expand to $3 trillion by 2028, reflecting stronger momentum than in the past 2 years, according to Moody's. And on that news, JP Morgan is down $2.52 a share, or almost 1%. And last, the CME Group wants to give retail investors an opportunity to trade corn and soybeans without the risk of taking delivery of thousands of bushels if they hang on to a contract for too long. Building off last year's record futures and options volume in agriculture, the exchange is launching 5 new micro contracts for farm commodities that will trade at 1/10 the size of its standard offerings. The contracts, which started trading today, are also cash settled instead of the physical delivery system for the legacy products. So you can now trade soybeans and not have to worry about a big truck backing up to your house and dumping them in your driveway. Some of you might think that's a joke, but it's not. It can happen. Okay, local news. Logic 247. That is our 24/7 around-the-clock E-mini alert service. We're currently in week 343. Over the last 343 weeks, we've issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 6:30 a.m. Eastern. Issued a total of 9 alerts last night. Still waiting on the outcome of 2. So we had 7 actionable alerts, of which 1 or 14% would have been stopped out, again based on market structure. And that simple process we teach all of our passport holders. And I think last week we ended up, we started the week last Monday or Tuesday with 100% because we had 1 trigger and 1 stop out. So at least we got a better start to the week. But we ended up not so bad. Let me see here. How did we exactly end up last week? Yep. Last week, week 342. We had a total of 35 alerts, 7 never triggered, had 4 stop out, so 14%. So we had 14% last week, and 1 day into the new week today, we're at 14%. So now, the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., as opportunity presents itself. Futures trade around the clock. We've got traders around the globe, so our day session is our night session, and vice versa. Now, the purpose of the logic alerts is to teach you how to read the chart. You should, if you're going to trade, you should be able to look at any chart of any market at any time frame, and with the help of our humble indicators, know instinctively what the next high probability move is. Yes, you can trade them, right? But don't get hung up on that, okay? Because you want to get to the point where you don't need the alerts. Because you can look at the chart and you can see where the next high probability resistance is, where the next high probability support is, and find the windows of opportunity in between. Using them properly, that is what the Logic 247 alerts will teach you how to do. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. They're published either shortly after or shortly before the Globex Open each evening. So last night, they came out 30 minutes after the Open, 6:30. Now, let's see. Thursday, I got them out at 6:35 last week. Wednesday, I didn't get them out till 7. I like to get them out at 5:55, 5 minutes ahead of the open. But some days life just gets in the way and I'm not able to do it. But I'm going to continue to strive to do that. Now, all of these targets, let's get to today. Here we go, Sunday. All of these targets, our members and trial members had these targets 30 minutes after the market opened. So when we go to the charts, just remember, it was right as the second candle was opening, because all alerts are created on the 30-minute chart. All members and trial members had these targets: the S&P, the Dow, the Russell, crude, NQ, gold, and silver. So let's go look at this daily chart as we do. And we got another doji. Now, a doji. For anyone that doesn't understand what a doji is, number one, it's a sign of indecision. But number two, what it means is, right here, that's where price opened last night. Now, from the opening price, 60.40.75, price ran up, price ran down, but it closed basically, or it hasn't closed yet, but we're right back to where we were last night at the open. We're below the VBC, so we anticipate lower prices. We had a huge down day Friday. It took us through all of the potential support. This step line, the daily VBC. We took out this low. We took out. Now, today we took out this low. And the next major low that we need to take out if we're going to continue on the downside, or the next area of major support, is roughly 59.87, and the low so far today is 59.94. Okay. Now notice up here, blue and climbing is turning to red and falling. Okay. Now the last time that happened, here's what we got. Price always reverts to the mean. In our case, the mean is green. It's called the VBC. It just stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Higher prices, lower prices. Now, through this stretch, there were days that we came all the way down to the 24% Fib retracement. Okay, one day, 2 day, and a number of days that we spiked below. But by the end of the session, we were back at or above the BBC. So that pullback held and held and held and held, and at this point it looked like we were going to take a run at the all-time historic high. This high, 61.66 half, 61.62 and a quarter. So we took that one out. $61.69.75. Nope, we missed that by about 3 points. So the daily chart is important because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. Many of these institutions have accounts in the hundreds of millions, billions, even trillions of dollars. And they trade in tremendous size. In fact, they trade in such size that they're the ones who literally move price. So whether you trade futures, stocks, crypto, Forex, ETFs, whatever the case, I encourage you to spend 2 minutes with the daily chart before you drop to your smaller time frame and start trading. Number one, it's a free look over the shoulder of what the deep pockets are doing, the ones who move price. And as this candle tells us here, they're undecided, okay? But with red and falling overhead, I suspect we're gonna, my guess, because nobody knows what's going to happen next in the market. My guess is we end up closing closer to the low of the day than the high of the day. I could be wrong. We've had a leg. This could be a retracement back to the VBC followed by another leg. But because red and falling has entered the picture, I do anticipate we're going to trade lower. Now, this low right here was 59.87. This low was 59.94. So buyers came in early before we got to this low, drove price back up. If it happens again, will they stand their ground? Will they defend that area? Or will price continue to the next major support at the 24% fib? So looking at the daily chart for a couple minutes not only gives you the opportunity to look over the shoulder of the deep pockets that move price, but you're able to identify areas of major support and resistance, like we just did. Support, support. BBC's resistance, and that old trend line. Step line, red and falling. This high, this high. Okay, so it's a big picture view, top down. And then, as I said earlier, all alerts are created on the 30-minute chart. Now, you most probably execute your trades on a range chart. Okay, if you're a part of the live training room each morning, I'm sure you're using the same range charts as Michael. The vertical line separates today, Monday, from, this would be Friday, Thursday, Wednesday, Tuesday. Now when price rallies up to a weekly zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. And so we took a mighty fall on Friday. Headline stuff. Okay. And these are the CTAs that were issued last night at the open of this candle right here. This was the opening candle. We had a gap higher open. Stefan put in the discussion group in Telegram last night that he anticipated a gap higher open, and in fact I think he said it gapped open 11 points. I didn't measure it, but close 60.32, open 60.40. Well, maybe I read it wrong. So we get a gap higher open. Price always reverts to the mean. That's the VBC. The pullback to the VBC holds more often than it doesn't. Now when blue and climbing gets directly above price, it becomes potential resistance because it's probably on its way to becoming red and falling, which is bearish. Okay. See, once this thing turned red, what do we get? And once this thing turned blue, what do we get? Okay. Now, this was last week's lowest weekly trading zone. I think we closed below the lowest weekly zone on a number of markets last week. I mean, that sell-off Friday, boy, that was blood in the streets. Now, these are last week's zones because any alerts that go out on Sunday night are based on last week's zones because the new weekly trading zones don't come out till Monday morning at 6:15 a.m. Eastern. Once the new zones come out, they're carved in stone for the entire week. They don't change in any way whatsoever. We've published the weekly zones. This past December marked 15 years. Every week for our members and trial members. Tomorrow on the afternoon broadcast, you'll see this week's zones. Any alert that goes out today will be based on this week's zones. But everything on a Sunday night is always last week's zones. So anyway, we made it up to last week's zone. Now when price encounters a weekly zone, one of three things happens. 70% of the time you get consolidation. 20% of the time you get rejection. 10% of the time you get the slice. That's when price slices through a zone on the 30-minute chart like it's not even there. When that happens and the move runs out of steam, price will typically retrace back to the zone it sliced through and then continue in the direction of the slice. So we got consolidation and it just continued consolidating just below the zone, the BBC, till 9 o'clock this morning. And then here's the 9:30 opening bell on Wall Street, which is typically the biggest candle of the day. It attempted a move up, couldn't take out that high, sign of weakness, and so we took out that low, that low, that low, and even the lows of Friday. Now we've retraced. When the step line crosses red and falling, price will typically retrace to the BBC. And again, the pullback holds more often than not, as it did here. So we're printing a green candle. You got to embrace all possibilities. Price could continue higher. Just keep in mind that right here, where the red line gets below the green line, that's a bearish cross. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. However, this candle still has 11 minutes left in it, and what we would anticipate is another leg to the downside. On the Dow, this was the opening candle. This is where the CTAs came out. We followed blue and climbing up to the VBC. Got above it really by one candle, but blue and climbing was right overhead. Resistance drove us back down. We finally overcame it, but we didn't make it all the way to the long target. Now you only need 20 points to get your goal for the day. So from 53,755 to 75. I mean, just a tiny little piece of that would be sufficient to get your goal for the day. Blue and climbing turned to red and falling. That took us back below the BBC. And we came below it. And then we pulled back, and the pullback held. And then we dropped, hit the short target, spiked it. And today's low, 43,420. Friday's low, 43,419. One tick difference. So you've got, what's that? A double bottom. Yep. So we pull back to the BBC. And we attempted another leg to the downside, but red and falling had gotten directly below price. So now We're back above the BBC. This high right here was important until we took it out. Okay, so where's the next high? Right there. Now, we've traded through it, but we haven't closed above it. That's important. You need to see price close above that horizontal red line on my chart. And then the next major resistance would be right here, where the step line crossed balloon climbing, and then this high, and then the long target. On the Russell, this was the opening candle last night. This is when the targets came out. Sideways we go. We actually get above the BBC. We don't quite make it back to the lowest weekly zone. And then balloon climbing turns to red and falling. The pullback holds for a couple of hours, then it gives way and took us far below Friday's low, down to 2173. The low Friday, 2196.97. Now where are we? At the BBC. Question is, will the pullback hold? If it does, you got potential support here, here, then of course here. If price trades through, you got a bearish cross right here. So the first time up, that area will most likely be good resistance. But the second time it could overcome it. And then you want to look at this high, this high, this high. In Q. Opening candle last night. This is where the targets came out. We got up to the BBC, consolidated most all night, and then took a drop to the short target, through the short target, through the lowest weekly zone from last week. Market found support right here. If you go look left, you'll see why. Got to go way left. Now the step line is crossed red and falling, so price is attempting to retrace to the BBC. Again, the pullback holds more often than not. Keep in mind, if price does trade through the BBC, you really don't have a bearish cross right there, because price never, balloon climbing never got above the BBC. So we're printing a red candle. You got potential support here at the step line at red and falling because they're directly below price. See, coming down, you had the perfect stack. Price, step line, red and falling, BBC. But now I have a different dynamic. Now the step line is potential support. Red and falling is potential support. So the area I would be interested in would just be this area here. Crude. Price gapped open all the way down here last night on crude. And in the first 30 minutes rallied all the way up here. And we've done a whole lot of, not much since then. We haven't hit the short target or the long target. Now this zone did serve as good support over and over. The zone is 70.15/70.20. So the lows of this candle, like this is 70.18, 70.19. So that zone held as good support. Now, this was a huge green candle all the way up to here, and then it collapsed. When you see all these wicks, okay, that means buyers are trying, but eventually the institutional buyers are going to say, you know what, I'm not going to keep throwing good money after bad. because the market is rejecting price up in this area. So I would be patient and wait for an opportunity to be short the market, okay? Which means you got to be patient and let price get back below the BBC. Gold, here's where we opened. This is where the targets came out. We had the short target and the zone, support times 2, consolidated there, got above the BBC, we got a leg and a retracement, a leg that took us right up to the target, to the tick. That was the high of Friday. See that? Okay. That sent us back to the BBC, the pullback held, the pullback held, the pullback held. And then the third time we hit the target, or fourth, fifth, we traded all the way up to Thursday's high. And Thursday's high became the resistance. And then we've just been going sideways. So the only market we have left is silver. We'll talk about that when I come back. But Michael's here. He's going to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform. And then we'll go over silver and wrap things up with our good word for the day.
All right.
And Michael, it looks good.
Excellent. All right, here we go. Good afternoon. Happy Monday, everyone. Today is the 24th day, Monday, the 24th day of February 2025. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button and it will bring you to, I don't have it up. Click on the purple button, it's going to bring you to this page right here. Now on this page, all that we ask for is your name, your email, your phone number. Then down at the bottom, if you want to use Ninja charts, we don't have all our stuff on Ninja, but if you want to use Ninja charts anyway, give us your machine ID and we'll set you up with what we do have. If you just trade on Ninja Trader and you're not going to use their charts, then that's fine. You don't need the machine ID then. You should get TradingView though, because the majority of the indicators that we use for the trades in the room are on TradingView. These two right here are what trigger the trades, and they're only on TradingView. So you should get TradingView, and if you don't know how to, you can go here to trading platforms at mytradingiq.com, click on trading platforms. Scroll down to right here, TradingView platform. Just watch the video. It's a 3-minute video. It's going to bring you to click on this right here, and that will bring you to this page. Click on non-professional, click on monthly. For $14.95 a month, you get charts, and you're gonna have to pay $7 a month for data. All right, you're gonna want to get the real-time data, but that's all you have to do to take the trial. All right, go here, sign up for the trial at the home page. The home page right here. Click on the purple button, sign up for the trial. Now, the results. Today we had a pretty good day today. We ended with a few stop outs, but we had a pretty good day overall. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. But today is, as I said, the 24th day of February 2025. We're up 194 ticks on the NQ, 96 ticks on the Russell, 4 ticks on gold, and 18 ticks on the ES. That put us at $1,715. Now today it took 3 minutes and 1 trade to get to $1,000. We were actually, it was kind of convoluted the way we did it, but we ended up with more than that. But I just said I'd just take the 8 ticks. I just write down the 8 ticks. And we took a total of 36 trades this morning. So on the month now we're at 16,000. Well, on the day we're up $1,715 with 1 contract, right? On the month we're up $16,457 with 1 contract over 13 trading days, averaging $1,265 per contract per 2-hour trading day. And on the year now we're at $48,635. That's over 33 trading days, averaging $1,473 per contract per 2-hour trading day. Now over here, if you were to quit trading when you get your goal for the day, following the 24/20 blueprint, if you quit trading when you get your goal for the day, then and added 1 contract per month, okay, so far this year you'd be trading 2 contracts right now. You'd be up $7,515. You would have had worked 5.5 hours, and you'd be averaging $1,366 per hour. All right. That is just the way it worked out. If you did what I did and you started in the morning with 1 contract, beginning of January, traded 1 contract all of January, then started with 2 contracts, beginning of February, traded with 2 contracts all of February, quitting when you got the goal for the day. That means quitting after this amount of time every day. Today would have been 3 minutes, Friday would have been 3 minutes, Thursday was 31 minutes, but most of the days are pretty quick. All right, quitting when you get to that point, so far, that's where you'd be, $7,515. All right, that's pretty good money when you think about it. For only 5.5 hours of work, I think it is. Anyway, let's get into the trades we did. All right, so today, now we had a little bit of a mix-up this morning on the charts. I had some issues and I switched back and forth between layouts this morning. So I'm going to go through, I'll try to go through trade by trade as I normally do on the chart where I have the arrows drawn. But I think we may be off a little bit because I switched from one layout to another layout for a few minutes this morning. And so we'll see if we have our first trades in here. If we don't. Right, so our very first trade was on the ES, but let me just get to the gold. On the gold, our first trade on gold, we picked up 10 ticks, and then the next trade, well, it looks like we had a break even. Then the next trade after that, we picked up 1 tick to get us to 11. Then it looks like another break even. Then we went to 13. Then we had another trade where we went to 19, and then we stopped out and we went down to 9. Okay, and then we had a break even, and we went from 9 back up to 14, and then we stopped out again and went down to 4. And that's where we ended it on gold with just 4 ticks. I believe that is what it says in the spreadsheet, right? Yes. Just 4 ticks. Now during the break, you can see there's not a lot of follow through. You see all these ones. There's not a lot of follow through in here on gold today. There wasn't in that period anyway, where there was a trend going on right here. Now I explained that this morning. When you're in a trend, the flat spots should be when you're at the end of the leg length is when the flat spots should be. All right, the pullbacks is when you should have just little points into the oversold in this case because it's an uptrend. So just keep that in mind. When you're in a trend, the flat spots should be at the end of the leg, not at the beginning of the leg. All right. So you see we got into a bunch of chop through here during the break, and even right here recently during the break, not a lot of follow through, it doesn't look like. That doesn't mean there weren't good trades in here though. Like this was 2 on that bar, but then it kept going down the next 2 bars. This was 4 on that bar, and it kept going down. This was 1 on that bar, and it kept going down. This is 0 on this bar, and who knows what it's going to do yet. We don't. But you got to keep that in mind. This is 3 on this bar, but it kept going up after that. All right. But anyway, on gold, we ended up with 4 ticks this morning. The Russell whooped us right at the beginning. Hopefully I have it all in here. I'll hit Alt and back a little faster. Oh, there are a lot of bars there on the Russell today. Here we are. All right, so like I was saying, the Russell whooped us right at the beginning. We started out our first trade on the Russell, we were up 11 ticks. Then we stopped out on that one, put us at -14. We had a break even. Then we went from -14. There's a stop out in here. I think this is when I switched to the other time frame for a minute. I stopped out and went to -39. Then we got 20 ticks back here to get us to -19. Yeah, that's right, -19. And then we went from -19 to -4, so we got a 15 tick trade there. Then we had a big trade, we went from -4 to +26. And then we went from 26, we had a break even, went from 26 to 56. Then we went 56 to 86, and then we stopped out and we went 86 down to 71. This is a stop out, there's a trade missing in there. And then went from 71 up to 76, and 76 up to 86, and then 86 up to 96. And I believe that is where we ended it. But there was some really good movement on the Russell today, as you can see in here. Really good movement on the Russell. Now, for those of you guys who weren't there this morning, one of the things I had pointed out this morning was when you're in a trend like this, you're going to get the flat spots when you're at the end of the leg length. That's when you're going to get these flat spots. The pullbacks should be 50% roughly. That's when you're going to get the ones right here that go like this. So if you go here to mytradingiq.com and you click on trade rules, I created this last week the 3 types of trades from the morning session. The most aggressive is what I do. That's trend trades and counter trend trades. There's no YBR involved. The aggressive trend trade means you're trading only longs above the YBR and only shorts below the YBR, and you're trading when it goes into the overbought or into the oversold instead of waiting for it to come out. The conservative is when you're only trading above the YBR or below the YBR, and you're waiting for it to come out of the oversold. So it's up to you how you want to trade, but the aggressive is what I do pretty much all the time. And I was pointing out this morning in the spreadsheet, if you look at the results in the spreadsheet, really, you can see when things change. Like when I introduce different things, like at the end of the 2420 blueprint, right here at the end of the 2420 blueprint, we were averaging on the year, that was this month right here, I think, right? Yeah, the end of August. At the end of the 2420 blueprint, we're averaging $428 per contract on the year, daily, all right? And then I added the TV trades range trigger. And then we went to averaging on the year $470 per contract. And we kind of stayed around there, 470 to 500 with the addition of the TV trades range trigger. But then in December, at the end of December, I added the divergence part of it right here. And then we went from $400 a contract or $400 to $500 a contract just in that 1 week at Christmas time that I added that went to $535 a contract. Then we're now up to over $1,000 a contract using the divergence trades. Now the reason I'm telling you that is because that's the number one. That's what I'm doing. Now for those of you guys who aren't willing to take that much risk every time, going counter trend and all that, and you want to do the aggressive trend trades, it's just if you're below the BBC, you're only taking shorts and you're only taking them when it goes into the overbought. You're not waiting for it to come out. If you want to be conservative, let me tell you about that. The conservative trades are going to eliminate the flat spots altogether when you enter, okay, because you're entering after the flat spot. But if you understand where the flat spots should be and where they shouldn't be, then the conservative trades may or may not be useful to you. The problem with the conservative trades is you have to pay attention to the leg lengths, okay? And it's not a problem. It's just one of the nuances with conservative trades is you have to pay attention to the leg lengths because, as your leg lengths get smaller going up and they get bigger coming down, then that conservative trade that gets you in right here, when you get into the end of the trend, that conservative trade isn't going to go anymore. It's going to stop right there, right? It's not going to complete the leg length. It's going to turn down on you. So these are just little nuances that you have to pay attention to. I mean, it's all part of the training, but it's things that you need to really, as a trader, you need to understand. You need to say, okay, if I'm going to trade with the trend, I'm going to trade the aggressive ones where it's going into the oversold, like this one right. Yeah. Like right here, anything above the YBR, when it goes into the oversold, I'm going to buy. When it goes into the oversold, I'm going to buy. Okay, if it goes into the oversold by itself, following the rules. But actually, with the conservative ones, it doesn't matter. You don't need a slingshot. It's just like this. Okay, it doesn't matter when you're going with the trend. You don't need the slingshot. Anytime it goes into the oversold, you're going to buy. Okay, that's the aggressive with the trend. Anytime it goes into the oversold, you're going to buy. The conservative with the trend, you're waiting for it to come out of the oversold and go in there. So like right here, instead of buying down here at the bottom of this bar, you're buying at the open of that bar. Okay, so you're missing a whole bar of profit in that. But you're not exposing yourself to this right here. This extra drawdown right here that might have stopped you out right there. This one right here probably would have stopped you out. Okay, that's the difference. But if you're in a strong trend, expect the flat spots to be at the end of the legs. Not at the beginning of the legs, at the end of the legs. All right, just want to point that out to you because I don't think we're not changing the underlying rhythm of the market. We're just changing our approach to using the underlying rhythm of the market to our advantage. Okay. And like I said this morning, if you go back to the very first workshop that we did, you hear Dwayne in that one. When Dwayne and I were doing that very first workshop, we didn't know. It was our very first workshop. We didn't really have an agenda. We were talking about the underlying rhythm of the market, I believe. And that hasn't changed. We're like, in our, I don't know how many thousandth workshop now, but that hasn't changed from the very first one till now. It's just our approach to using that information is better. And that's it. All right. So did I get through all the markets? I don't think I did. What did I stop on? Did I stop on the ES? On the ES, we ended up with 18 ticks. I think I was going through the Russell when I did that. But let's do the ES. On the ES today, let's see, I did a lot of talking in there. On the ES, sorry, I got sidetracked. And I don't even have the question box open to see if you guys are asking me questions. Oh, you did. Joan did anyway. Okay, and she figured it out all by herself. All right, so on the ES, this was our very first trade. We picked up 8 ticks on the first trade, and then we didn't trade it again for a little while. It's not to say that there weren't some trades in there. There were some nice trades in there, but I didn't trade it again for a little while. I got a break even on that one. Then I got a plus 20 on that to get us to 28. And then the next trade, I stopped out on that one right there. And that was where I ended it for the morning session. During the break, looks like there were some pretty nice trades in here. That would have been a counter trend trade, but it worked out okay. This might have not been anything right there. This would have been a nice trend trade, right? Oh, that's been counter trend again. That worked out okay. This would have been counter trend. This would have been with the trend. This would have been with the trend. Looks like there's a trade right here, but I'm not sure that black line is printed yet. Let's see. Yeah, I think they're together right down there, so that's not an actual trade right there. But on the ES, had some good opportunities today. We ended up with plus 18 on the ES. Right, went from 2. What? I went from 8 to, I'm sorry, we went from 8 to 28 and then down to 18. That's what we ended up with on the ES. Okay, and the NQ now. The NQ. Daryl, is Daryl in here right now? Daryl's not in here right now. Okay, well, let's do this to go to the beginning of the NQ because there's a lot of bars on the NQ. Just so you know, I'm pressing Alt in the back arrow right now to make it scan so fast. Alt in the back arrow. Wow, there were really a lot of bars there on the NQ. This is a 50 range, right? There's still this many bars. We're only at 11 o'clock. What happened that so many bars printed? No, that is a ton of bars. Look at all those bars.
Yeah, and you're still at 11 o'clock, so something's...
Yeah, it's still scrolling. I mean, that does not seem right. Let me go to 100 range and then back to a 50.
There you go.
There, okay, that brought us right to the beginning. Yeah, something didn't seem right there. Okay, so this is a 50 range. Our first trade on the NQ was right here. We picked up 75 ticks on the first trade, and then we didn't trade again for a little while. And then we picked up 75 ticks on the second trade to get us to 150, and then 24 ticks on the third trade to get us to 174. Got a break even, and then 20 ticks to get us to 194. We did not trade the NQ much at all today. You can see in here that there's decent follow through in the chop. You know, it's 20 ticks to get the stop to break even, and almost everything went at least 20 ticks. There was one that went right here, went 19. I believe you probably would get a better entry on that, and it was 19 on that bar. It kept going on the next bar, so that would have been break even at worst. This one here, this long, only went 18. That probably would have been a stop out. Unless you got a better entry on the bar, that would have been a stop out. But that's what it looked like this morning. It was pretty nice trading. I didn't do too much of it. I was preoccupied. But just going through, you can see, looking at the numbers that it did give, for the trades overlap, this one right here, divergence trade right there was 48 ticks minimum, 48 ticks. This one right here, 40 ticks minimum. That one right there only went 7 ticks on that bar, but it ended up going up after all. This one right here was good for 50. This one right here was good for 35. This one right here 25, and then that's just on that bar. You know, it kept going after that bar. So it was good trading today on the NQ. I mean, I ended up with 194, but I only had a few trades on it comparatively. So that's it. Dan, do I have a template for my DOM, not target and stops? Yeah, Dan. If you go here to trading platforms, go to mytradingiq.com, trading platforms, and in the Sierra zip file, if you download the zip file right here, it's got all of it in there. It's got the chart book, it's got the DOMs, it's got the brackets, it's got it all in there. Okay, you can download the zip file in some other place. Don't put it in your, the place you're supposed to put it is, in here in C, Sierra chart and data. But if you go in there and make another folder for yourself, it's going to be a zip file like this, but if you go in there and make another folder for yourself, download it into that folder, and the things that you want to move are the skid files. Right? That's the actual DOM with the colors and all that stuff. The skid file in the chart book is what you want, the CHT and the skid. Like you want the TIQ CHT and those skids. Okay. Yeah, that's what Daryl wants to meet with me about 2 o'clock. All right. And you saw what that was, right? It was at mytradingiq.com. Mytradingiq.com, trading platforms. Click on trading platforms. It's right underneath this, the download right here. If you put it not in the data thing, so it won't overwrite anything you have, you can put it somewhere else and then just take over those files that you want. Make sure you take the chart book, because the chart book is going to reference those skid files. I don't know if those skid files will open up if you choose another chart book. I don't know how that would work. I don't think they will. Okay, I think they're matched up. This TIQ CHT with these skid files. Okay. All right. So if you're trading with the trend, you don't need the black line in here, right? You don't need the ultimate slingshot if you're trading with the trend. So if we just take that off right here on all of these, and we just go with go the trend trades. So it's got to get down into the oversold. This one is in the oversold right there on the Russell. So you can buy the Russell right here where it is now. I'm a little late getting in on this Russell. I should have bought it at the open of this bar right here. Actually, it was the open of this bar. Oh, I just bought it where I just bought it right here. It's not the greatest entry for this bar, but it is a great entry on the other bar. So it's got to go 10 ticks into profit. Right up here is going to be break even when we get up to 3.7. Okay. The yellow needs to get up to 3.7. And then I will bump this to break even. And this is the only one giving us a trade right here is the Russell. Okay, so looking at the market right here, if I do always on top and we slide this over, looking at the market, what should this do? What should this do right here? This little piece of information that the market has given you, what should it do? Honestly, it should pull back deeper than it has. It should pull back up to here is what it should do. If I'd have gotten in at the right spot was actually up here, it would have stopped me out. I think it would have stopped me out. 19 range, yeah, it would have stopped me out if I got into the right spot. But it should pull back to right about here is what it should do. Okay. And if it gives another trade from there, like it just gave a short trade right here, right? I'm long right now, but I've already missed the appropriate entry for the long trade. So I could actually take a short trade, and too late for that now, but it should go down to right here, right? This is what the market should do. So I'm all mixed up in the trade because I took it wrong to begin with. So that was my mistake, but it should go from here down to here. Right about here is what I was saying, right? Right about there. And from there, we should get a long trade. And the long trade from there should bounce us up this high, that high, from there up to here. Okay, that's what it should do right now. So I got in at the wrong spot to be able to take all the trades it just triggered. It was this one here that I ended up taking, but I took it at the wrong spot. So it kept me alive in that trade, but it made me miss that trade, and it's going to keep me alive in this trade. If this trade does start to work out, then I'll be okay for the entry. It'll probably be about the right entry for this trade, is what it'll probably work out to be. There it is. Okay. So what we want to see now, let me get rid of that last thing. We want to see it complete this leg up that I just drew for you. All right. That's what I want to see it do. I'm still in it, but I screwed this trade all up. So I should throw my stop to break even as soon as I can, but it should make it all the way up here. At a minimum right now, it should make it up to the swing high, which is right here, 204. Okay. It's just right here. At a minimum, that's what it should do. And that'd be enough to get my stop to break even following the rules. Okay. While I was doing all that, we had to trade here on the ES and we had to trade over here on the NQ. All right, the NQ trade would still be working. The ES trade would be in profit. There's actually there's a counter trend short trade right here on the gold, and then it started moving up. But you see all that, right? I mean, if you've been following any of the trainings that we've been doing for the past decade, then it should all make sense for you. You know, the pullback should have been deeper than it was before it gave the trigger, and that's what it's doing right now, that deeper pullback. And I was thinking if it did do the full pullback, it would stop me out. It would have stopped me out if I'd gotten the entry up here. I definitely would have been stopped out, and I'd have taken the short trade on the next one, which would have been the open to this bar. Like I would have stopped out entering up here. On the top of that bar, I would have stopped out. Okay. And then I would have gotten some profit on the entry of this bar. I would have gotten some nice profit on that. And then this one right here is the one that I should be currently in. I'm still in, but I screwed the whole thing up. So I'm kind of mixed in between entries here. But you see that, right? Now I'm just letting this play out because I accepted the risk when I took the trade. If you guys don't know what that means, read Chapter 7 of Trading in the Zone by Mark Douglas. So I took the trade and I committed to that trade when I took it. Whatever else happens while I'm in it happens. If it stops me out, then I'll look for the next trade. Okay. Now, somebody had asked me the other day, if you're in a trade and it reverses, should you reverse? And my response was, if you're in a trade and you get a signal going in the opposite direction, like we very well could have done right here, if you get a signal going in the opposite direction, don't reverse, but trail your stop really close, because you don't know that that signal is going to trigger right away. And usually when the trigger signals, it'll keep going in the direction that it was going in. So trail your stop really close. And then if it reverses, then enter going the other direction, because you're probably going to have a better entry than you would have had. You can take more profit from the original trade, and you'll have a better entry than you would have had going in the opposite direction, because that opposite direction trade is probably still going to be valid. Does that make sense? There it goes. It should get up to here. Right here. Okay. So we gave another long trade from right here. So if you entered here, you would just had a whole bunch of profit in that. Now it's given a short trade from right here. But what I was just saying is if you're in this, you trail your stop really close. Okay. Locking in profit because it kept going. And then if it turns around right here, you know, you'd get out taking the profit on the long trade. Right? You get out taking the profit on the long trade, and then you'd have a better entry for the short trade. You'd be entered up here instead of right here at the open of this bar. You'd be entering up here somewhere for the short trade. So you'd have a better entry for the short trade. Okay. Now I'm going to throw my stop at break even because I screwed this trade all up. So my stop's at break even right here. And hopefully it's going to get up here at 204 anyway. Okay. So now I'm out. But you understood that, right? All that process that I just went through, the mental process. And see right there, if you were in that trade and you trailed your stop up really close, and then you just got taken out like I just did and reversed it right there and shorted, you'd be taking profit right now, but you would have had a better entry. That's exactly what I was trying to say just happened. You would have had a better entry at your on your short, then the open of the bar that triggered, the open of this bar, you can't really see it because the one is in the way, but the open of this bar, which is right about here, you would have been able to enter up here, exiting from the other bar, taking more profit, and entering this bar to get a better entry for the short. Do you see what I mean? I wish that guy was in here so I could see that example, because that was exactly what he asked about. So we ended up getting a break even on this one, which is pretty good considering I really thought I was going to stop out, and I messed the whole thing up. The NQ's got a short here. If I can find my NQ done. The NQ's got a short, and it's not too late to get into that. So there it is. Now the proper entry on that would have been here at 48.25. I'm in at 50.75, so I got a better entry on that. And that has to go 5 points into profit. So from 50.75, it's going to get down to 45.75. 45.75 for me to bump the stop right down here. Okay.
The guy you wanted to see that, he can just go to today's YouTube video and fast forward an hour and 20 minutes. And
oh, that's true. Yeah. I will tell him that. Yeah, fast forward to about 120 in the time down here at the bottom on the video. There it goes. Stop to break even on this. You see how easy that was? I'm going to lock in 4 ticks on this. Okay, oops, that's 5. I'll just lock in 8, I guess. Oops, I went against the trend on this one. It probably might not even be a trade here. A valid one anyway. Okay, so that was 5 points right there. 20 ticks. 20 ticks. And $200 a point. All right. Let me write that down. All right. So we got 20 ticks out of that. We got a break even on this trade that I messed up over here, luckily. There's a trade here on the ES. Now the ES trade, it's still okay to take right now because it hasn't gone 4 ticks into profit. So it's still okay to take. And this is a trend trade. This is an aggressive trade with the trend. You see we're taking it when it goes into the oversold. I took it. I'll bring it over and show you. But we went into the oversold. So I'm taking the trade on the entry of the oversold. I'm not waiting for it to come out. So this is an aggressive trade with the trend. And my entry's here at 44.25, and I believe that's right where it should have been. And that's off by a tick. Let's go to 10 tick stop. So look at this. What would you expect out of this, right? Even forget about this. But what would you expect out of this? Your leg up is this. Your 50% retracement is right there. What do you expect? At a minimum, you expect it to get up to here, right? At a minimum, you expect it to get up to there. What you really expect is this, right? That's what you should be getting out of this right now, like that. Up to there, 49.25, something like that. Okay. You should all see that. And every trade that you take, you should be able to see that, see what is happening, what the market is giving you, what information is it giving you. This one right here on the Russell. I mean, I know we're above the YBR, but it did this leg down and then a 50% retracement right here, and then it pushed down from the 50% retracement. How big of a retracement is this pullback right here? See, I can't see that. We're still in that ES trade, by the way, but I can't see how big of a retracement that pullback was. That was a pretty deep retracement right here, this pullback. This was your leg length up. It did a trend change right there. So I was trying to figure out what it was going to do here when it made this leg up, which was a 50% retracement of that leg down, and it gave you a shorting opportunity from up here, right here, that was profitable. Then it gave you a long opportunity with the trend from right here that was just profitable. Still in that ES trade. But that's, when you take a trade, that's what you got to think. What should the market be doing right now? And, the ES, we're still in it. And what should it do? It should get up to here is what it should do. But at a minimum, because it's with the trend, it should go to the prior swing high, which is right here at 47. So if it gets up right here to 47, that's plenty. That's the goal for the day times, well, how many? 1.5. And that's all you expect out of a trade. Makes sense, right? Dan, makes sense to you? Jeff G, you logged in? I thought you were going on a training mission. I know you can log in from your phone, but I'm going to remind everyone in here next week, I am not going to be around, right? Next week. I will be on vacation. A real vacation. Looks like it's going to stop me out. It hasn't stopped me out yet, but it looks like it's going to. But it's time for me to wrap it up. It just did something else. All right. Well, with that, let me just show you this. If you haven't taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. The purple button's going to bring you to this registration page. Just fill it out. We need your TradingView login ID, right? If you want to have charts like I have in the room, you need to give us a TradingView login ID. All right. That is it. That's how you get it. Today we had a good day this morning. We were up $1,715 a contract this morning. It was a nice morning. It flowed pretty well most of the morning. I had my share of stop outs, but we had some really good gains. The NQ I hardly traded at all, and I was up 194 ticks, 275 tick wins on the NQ. It was almost all of that. But that is it, guys. With that, I'm going to pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
Today it took 3 minutes and 1 trade to get to $1,000 with 10 contracts on.
Good job.
Thank you. Thank you.
Okay, guys, we made it through all the markets but silver. And here's silver. This was the opening candle last night. This is the candle where the CTAs came out. We traded down to right here. Then we pushed all the way up to the BBC, through the BBC. Now when price moves up to a zone, we expect resistance till proven otherwise. When it drops to a zone, we expect support till proven otherwise. Support. So we hit the zone. Again, these are last week's zones because all alerts that go out on Sunday night are based off the previous week's zones. But any alert that goes out after 6:15 a.m. Eastern Monday morning are based on this week's zones. So on tomorrow's broadcast, you'll see this week's zones on my chart. So we hit last week's zone, resistance. We hit it again, resistance. And then we finally made our move down to and through the short target. Remember, the pullback holds more often than not, even when it does this. So both of these candles are still touching the BBC. So it reached up like an obsessive compulsive thing. Just had to touch that zone. And then it dropped like the proverbial rock. Okay. And again, look left and you'll see where the support came from. Okay. People often ask, how far back do I have to look? As far as you need to. The step line is crossed red and falling, so price is attempting to retrace to the BBC. That's what we anticipate. Pull back holes more often than not. If that be the case this time, we'll get another leg to the downside. If not, and be sure to watch this area right here, 32.90 as potential resistance. And then you got pretty clear sailing up to 33.10. One last look at the daily. Still got that doji going on. The big question is, at the close today, okay, I mean, we've been way up here, we've been way down here. It's a lot of range from 59.94 to 60.67. That's like 70 points roughly, 70-point range on the day. But here we are, stuck in the middle with you. So how we close today? Will we close closer to the low of the day or closer to the high of the day? If we close as a doji, then that's major indecision, especially as big as this candle is. Okay, we had some smaller dojis here in the last few days. We had some that were dojis, but then by the close that changed, and this probably will too. It looks like it wants to move higher, but I don't know. We'll just have to wait and see. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name and phone number. We'll send you an email that explains everything it means to become a passport holder. And there'll be a link you can click to seal the deal. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. So we plug the gap that plagues 90% of new traders by providing 2 hours of live training every trading day since 2008. On top of the interactive 2-hour group training every day in live markets, real trades in real time, real money, blah blah, you get access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones, and you're able to attend the members only workshop every Thursday night. And you get the key, the golden key that opens all the private channels in Telegram. You've got private channels, public channels, but as a passport holder, you've got access to everything. Everything a trader needs, all under one roof, one low price. Just send your email here. We'll get you going. All right. Let's wrap it up with our good word for the day. Moving from failure to success, part 1. Whose weakness was turned to strength, and who became powerful in battle? Hebrews 11:34. The writer of Hebrews said, I do not have time to tell about Gideon, Barak, Samson, Jephthah, about David and Samuel and the prophets, whose weakness was turned to strength and who became powerful in battle and routed foreign enemies. Some of the biggest success stories in Scripture are about people who struggled with weakness and character flaws. They were mired in seeming failure and defeat, yet led by God's grace, they overcame the obstacles and the odds stacked against them. The overriding theme of the Bible is resurrection, getting back up again. Here's the question. If you can't avoid failure, and you're not supposed to give in or let it color your thinking, how do you handle it? First, change your attitude. Don't listen to people who put you down when you fail or tell you not to bother trying something because you'll fail. These people are underachievers with a negative mindset. They never get anywhere for lack of trying and stay stuck in a rut. And they feel more comfortable if you stay stuck with them. The people who succeed in life have faith and tenacity. They refuse to give up. They have decided not to let failure defeat them. Note the words, whose weakness was turned to strength. You may start out weak, but by God's grace, you can become strong. You can rise from the ashes of failure, achieve your goals, and live the life God intends. How do we know this? Because God's Word says so. Part 2 tomorrow. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.